What's up? The long-awaited Confluence Part 2. Sorry guys, this took forever. The upside to this though is that I'm gonna add a little bit of extra sauce to everything here. I'm gonna show you guys a couple of new tips and tricks. I'm gonna involve some of the older things with some of the newer things. Some of these things will be repeated, but you'll see how it kind of makes sense. So guys, why I decided to do two Confluence videos is because different confluences show different things. So the best way to do it is when markets are doing something differently, because I use more current sort of areas, right? So just one thing, once again, apologies for the audio if it's a little bit wonky. We are moving house, as I said in my previous videos. Anyway, let's get down to what Confluence. Remember what Confluence is. Confluence is basically just using multiple tools, already existing ones, or a kind of strategy that allows you to plot specific lines, shapes on a chart, right? To show you the directional bias of a chart, right? So what I'm going to do a nice analysis to show you guys what how my day-to-day would kind of work, or not my day-to-day, but this would be an example of how my Sunday looks prior to me uploading the video, right? So you're kind of getting like a sneak peek of how I do things in the background before I upload the videos for you guys. So my first thing is, let's say hypothetically we're coming into a brand new month. I go to the monthly chart. I look at what the monthly chart showed me here, right? I see there's a solid support level here. Then I kind of just scope out the monthly chart. Where are we? What are we doing? We got a confirmed low here. Okay, cool. I see like we're pushing down a little bit. What do I see on my chart? Now, guys, I'm not going to go into the details of these things. However, you're welcome to join our groups, and you will learn about some of these things. Here is an imbalance here. So if you guys don't know what an imbalance is, it's just a gap between three candlesticks where market movers are causing the gap, right? That's simply put. That's as simple as I could possibly put it without giving away all the source. So here you see a wick, here you see a wick. There's a gap between those two wicks. That cannot happen, right? If you look here, there you see the market came up. Here's a wick. This couldn't fall. This wick finished the job, right? That's an imbalance. Done. Simply put, that's all I'm going to show you guys, right? Then I have a look at the chart and I think to myself, okay, what's actually a good area to be thinking out? Here I have a good area here, good wick touches, good solid area of support. Here I have a nice order block here, so I'd put a line out here, right? What you can do is, guys, you can also just map these things out like this, for example, and say, okay, cool, this is an order block, you know, like that kind of thing. Depends on you, how you choose to interpret it. Cool, I'm just going to do it for the line for the purposes of the video, right? What else do I see? I see my 8 is still moving in a downward direction, and I see my 14 is also moving in a downward direction now, right? This is suggestive to me that we could potentially see more sell momentum to the downside. Let's say today was the 1st of April, more sell momentum to the downside. We also have a few areas of interest that we want to take into account here. Here I also have an area here, bang, right? Now I go to my weekly chart and then I say to myself, okay, what do I have here that's of interest to me? Yeah, I see an imbalance that was being filled here by this candlestick. It was now filled. There's no longer an imbalance here, right? What is my overall trajectory when I look at it on the weekly chart? We're still very much on a down area, right? What we see is the market pulled up, failed to break this supply. So you see my imbalance became my supply zone, right? You guys can mark that off, right? That became my supply zone. Here I have a demand zone down here, right? I have a demand zone down here at the bottom here, right? These are the two. So this, between these two ranges, are my range of what I want to work with within the next week, within the next month, within the next day, depending on how fast the markets move, depending on how quickly things can get reacted to on these charts, right? Now, I see the previous close, so today is Tuesday, right? So I look at Sunday's close, my Friday's close, I pull up my Fibonacci from the swing high to the swing low, and I see what I get. And then what do I see? I see we got a perfect rejection of the 61.8. I see here the 0 is a good target to make. I see the minus 27 is a good target to make, and I see the minus 61.8 is a good target to make. They coincide quite nicely with my area. When I told you guys about putting rectangles over, the rectangle would be something like this, right? And would perfectly coincide with an order block. Now, I'm not going to get into order blocks with you guys. You guys are welcome to check for further videos that will be uploaded soon. Yeah. Now that I know my 61.8 is there, this was my confirmation candle. This is the confirmation candle to sell. I actually sold from the midway through this candle already, but that I'll show it to you guys on a lower time frame, right? Now we go look at the daily chart, and what I'm looking for is points of entry, right? Now so what I'm going to do is, guys, I'm going to do a quick, this is like just a quick analysis on the chart to show you how I do it, and then I'm going to go into a past place, and then I'm going to show you guys how I do it there. So I'm looking at my daily chart, and I see we're still very much bearish, where we came into our supply zone, we rejected, we fell down, we come into the previous lows, we come into test. However, we see a potential for head and shoulders here. Now, guys, you'll notice I'm taking note of all of these things all of the time. Right, there's a shoulder, head, shoulder. Sorry for the distortedness, and this is potentially where the shoulder will form. Come here and shoot up, right? Me personally, I don't really trade these patterns much unless it's on a lower time frame when I'm using it as a confirmation. I don't like to trade them on high time frames. If I do suspect there's a buy here, based on the fact that there's head and shoulders, where we are good to go there. However, what I do see is the 200 MA is above the 50 MA, bear market. The 8 is below the 14, bear market. We're coming into an area of concern, right? However, we formed a series of lower lows already, showing us that this could just be a pullback that might take place if this thing does buy, right? If it buys past all of these, this will be my target, right? Now I know what I need to do. I have all of that. Now we jump into the nitty-gritty of what we want to do, what we want to look for, all that things, right? So I'm going to quickly put up an example for you guys, and with that example is what we're going to run through. Yeah. Okay. So now we have our example, right? We're having a look at the market now. We see the market's doing its thing. That we rallied upside, we came downside, we came up. Now we need to decide what we want to do with the information we have here. Right? So based on what I'm seeing, we see a confirmation of break of structure here. Here's a higher low, here's a higher low here. Now what this tells us is potential for a buy, right? Now, what do I need to take into consideration? What did I cover with you guys? I need to take into consideration that there was an imbalance here that got filled. So that imbalance is now filled. There is one here below that I need to be careful for, and that I'll just keep in mind, right? I'll keep that imbalance in mind here. Right? I'll run it through this way, just so that we can see in a later stage if it does actually manage to get there, right? So based on what I'm seeing, okay, I see a higher low, I see a higher low, and I see another low being formed here. Now we're in an upward trajectory currently. Now all I need to do is I need to pull out my Fibonacci. Pull out my Fib from the swing low to the swing high. Just make it a little bit more cross, right? And now I'm seeing a 38.2 rejection, right? We can still see my 8 is still above the 14. We can see an imbalance was filled. Normally when imbalances are filled, it causes the market to push upside, right? So the imbalance was just filled. I see the 8 is above the 14. My 50 is a little bit below, but that's no big deal because my Fibonacci is showing me 38.2. I do, however, keep in mind that the 61.8 is sitting at the base of my imbalance here. So that will show me one of two things. I can either catch an entry off of this, should we go bullish, or I can wait for the imbalance to come all the way down, touch it again and shoot all the way up, but we'll see what happens from there. With what I'm seeing currently, 38.2, right, is my retest area. Oops, my 38.2 is my retest area. So all I'm going to do is, I'm going to mark off this area, and I'm going to mark off this area, right? Oops, sorry guys, mark off this area up here. So these are my targets. If we get in from here, for you more conservative traders who aren't like patient enough, you mark off your 0 as well. Remember, if I'm getting in from here, that's a decent amount of pips to chase upside, right? So I get a 38.2 rejection. All I need is a confirmation candle, right? Just slow this thing down. Tag. All I need is a confirmation candle to show me that we could potentially go bullish, and I will target this area up here. Now remember, with this being where it is, this is the all-time high, so solid area to target, right? Cool. Now let's see what happens just based off those confluences. I'm going to keep this video significantly shorter than the previous one, guys. It's because I want you guys to understand that Different confluences are different things. I'll keep uploading more Confluence videos. I'll keep uploading more examples, but this is just to show you guys how to use Confluence with a new technique. What we do introduce here, order blocks. The next one I do, I'll introduce, we used imbalances. The next one I'll introduce order blocks to you guys. Then the next one we're going to use, I'll show you guys scalping tactics on lower time frames for these things. So with the information we have, with the fact that we know there's an imbalance here, we know the bottom of the imbalance is a 61.8, we know the top is around about the 50 level, and we know we are currently standing at the 38.2. What are we waiting for? A bullish confirmation candle, right? Let's play and see what happens. Now remember, this is my target and this is my target. Conservative trader, this is your target, right? Bang, bullish confirmation, right? Bullish confirmation candle, we're in. I would have gotten in midway through here, right? Midway through, as the candlestick broke and closed above on a lower time frame, I would have gotten in there. Target 1 hit on for the conservative trader. That wouldn't have been my target because I'm trading on a daily chart, right? Let's see what happens. Target 2 hit. Market pulls back again. Market pulls back again. Target 3 hit, right? Beautiful example of not using all of your things, but look how beautifully it panned out though. So, well, let me just replay that for you guys again. We were here. Oops, maybe that was one too many. Right? We were here. We got a 38.2 retest. Right? The 38.2 is on this level right here. It filled an imbalance on the left. Imbalances, when they get filled, tend to cause pullbacks. If the market is in an upward trajectory, the chance of the market continuing upside after filling an imbalance is high. Right? Guys, that's a golden key. If you don't know imbalance, please make yourself familiar with it, right? It's a golden key. We do offer it in our courses. It forms part of our smart money concepts that you're welcome to reach out to us at any time. We'll teach you all the stuff where you could possibly need to, from a scalper to a swing trader to a day trader. It doesn't matter. This concept can be used on any kind of format, right? So we have a 38.2. We are aware of the imbalance below. However, we are not too worried about it. Based on the fact that we just filled an imbalance now, we rejected the 38.2. So in order for that to be valid, we just need a bullish confirmation candle. Your conservative entry, right? You will look for it on a lower time frame. However, I didn't need to because I wasn't going to target that. I was going to target the minus 27, which is up here, the all-time high. And then I was going to target further above, right? Based on my fib extension levels. If you guys haven't yet, I definitely encourage you to go watch the past basic trading tools videos. I cover everything I've covered here with the exception of the imbalance. I've covered everything. I've covered the moving averages. I've covered support and resistance. I've covered the fact that we know what everything is here. Like I covered the fact that Fibonacci can be used as targets. I covered the importance of understanding what Fibonacci does. So let's have a look again, right? Bullish confirmation candle, right? In. You get in from here, the engulfing candle. You can get in on this candle the minute the body came through. This would have happened closer to the close of the market. Bang, you get in, right? You leave it. Tomorrow you come in, you're going to get a little bit of drawdown. You're going to touch your 8 MA here, and the market will continue upside. Remember, what did I say in my moving averages video? The market will always come chase the 8 MA. The market will always, the 8 MA is kind of like the thing that keeps things at bay. It doesn't allow the market to pull too far away. It also shows you points of imbalance that can be filled, or that should be filled. So if you look at where the 8 MA is, and you look at where this wick is, you see how close together they are, because the 8 can also indicate for you that there's an imbalance there and the market needs to pull back down. The 8 MA is actually a super phenomenal freaking moving average. I've never seen its value until moving over to trading more smart money concepts. So yeah, let's finish the rest of the video. Yeah, target 2 hit, target 3 hit, right? Perfect. Now let's just see what happens further down. We want to see if the market interacts with this level in any way at any time, right? Just trying to show you guys like what an example of what actually goes on in these markets. Right, so as you can see, the market's like totally progressing upside. So what I will do with this level is, right, look at that, guys, it's coming to chase there, and there you have it. The market filled the imbalance. And what did it also do? You could have used, and I'm going to show you guys this in a later video. Here's an order block, right? Man, guys, there's so much nuggets here. Here's an order block. If you put that order block out as opposed to the imbalance, you would have gotten that whole sell downside, right? Perfect, guys. Perfect example of how you use entities, how to use imbalances, perfect confluences. Because think about it this way, the market came down, bang, you buy from here, woof, gone. You could have catch it all the way up into the new level. You could have catch this whole buy upside because you're taking it into off of an imbalance. But that's a video for another time. And with that being said, guys, that's Confluence in a nutshell, really. Like every week if I upload, well, not every week, but every now and then, as I upload more Confluence videos, we use more and more different things, giving you guys more and more examples. And then, yeah, I hope you guys enjoyed the video. Without further ado, let's keep it moving more than average.